Hey, everybody, welcome back to another beautiful Saturday market update. Okay, so here's the funny thing. So inventory has been creeping up. Prices have been holding firm. Now, there's been a lot of media information out there, and it does not deal with our area. There's a Zillow report that came out and said, hey, I think the Seattle market's heading in a downward trend. We're flat. We're not going down. If we bring in the condos, the condo market is definitely on the suffering side. They will look like or give appearances that we're heading in a downward trend. So we're going to go over May market stats. This is what? This is June 6th, so we're all good. They're still talking about March and April, and we're not. So let's get into this. Let's have a good show. All right. Hey, one more thing to keep in mind. We'll set this up as channels, or not channels, but I guess chapters, and you can jump ahead, whether it's the what's going on or what happened in May, what's going on in June with the market, where are we trending in real time, with that new construction, what's going on, and that one's an interesting chapter. Make sure you listen to that one, and then of course we talk about REOs, bank-owned homes, and things like that. As the tail end. So as we roll in here, inventory continues to grow while home prices remain stable. This is a NWMLS statistic. This is part of their narrative. It comes out about 2 weeks after ours, but it's consistent, and it says housing inventory continued to expand across the Northwest MLS service areas in May. Active listings increased to 16.8% year over year, and 15.2% from April. Now, keep in mind, this time of year, we're lagging a little bit just because of some of what's been going on in Iran and whatnot, and interest rates were doing super well, and then they went back up again, and now they've kind of crossing and heading in a downward trend, and which has brought out a number of buyers. But understand, this is situation normal. 4 to 6 months is considered a average or a balanced market. I really think that 3 months is our 3 to 4 months is more of our balanced market, the history of the last 12 years. And we'll see, we're still not even back to, 2019 and prior inventory levels, even though they look big here, they're still not. Even showings yesterday with our clients and, meeting up with a couple of their agents, we laughed because there's well-priced homes, we're still seeing multiple offers. Just keep that in mind. All right, let's keep going here. So it continues to say, it says the highest inventory levels recorded so far in 2026. Yeah, no kidding. Nearly 2,800 more homes than the previous month, which is awesome. It says, listen here, pending sales increased 7.7% in April, and closed sales rose 9.5% month over month. Reflecting a continued marketing activity with the spring buying season, transforming into the summer. Now, again, when we talk about that, spring is normally a lot more aggressive for us. The however is, and some people say, why? I say, well, because you have that vacation trifecta. It normally slows down. But we seem to be just kind of lagging all year long here. We'll see how the summer rolls out. Normally, historically, pretty slow. But as you can see, our numbers are already better than what people are already looking at because they look so far in the rearview mirror, whereas we look at real time. All right. I'll get off my soapbox. There we go. All right. Let's see here. The median sales price for the second consecutive month is declining about 1% compared to 2025. We're talking about pricing on that one. It says, here's the key nut for you. Keybox activity, get it, key nut. Keybox activity increased 12.2% from April, and more than 25,000 listings, received at least one showing per the month. That is up 10.8% from a year ago. Bottom, it says, while inventory levels continue to grow, elevated mortgage rates remain a key factor in what's influencing buyers and demand. And without a doubt, when we see the mortgage interest rates bumping up again 6.5, buyers are pulling back. When the interest rates start coming down closer to 6.25, buyers come out of the woodwork. Why? It's cost of funds. It's super simple, and they'll wait it out. And because it is pretty volatile, well, that's what's happening. Now, funny enough, if we take a look at, our some of our charts, you're going to see when we look at the average of the last 5 years, not a whole lot has been changing. You're going to see everything's kind of really clumped together. 2022, which was that was kind of the tail end of the crazy lower interest rates. Everybody ran in to buy a home because of interest rates being low and whatnot. Well, then all of a sudden 2023 rates went up and everything kind of went back to situation normal, and you're going to see that. So in fact, let's pop forward and take a look at it. So here we go. Here's listings over the last 5 years. 2026 has been our highest year, no different than what we're talking about, but not craziness. In 2019, it would be above the 2026 number. Look at this, pending sales. We're right in the mix of things, right? Yellow is 2026. That is just right there in the middle. Not high, not low. Again, pretty flat. Look at that. Here's our solds over the last 5 years. Unlike the 2022 one-off, look, our numbers are just right there. They're right in the mix of things. When we talk about months of inventory, because our inventory is higher, we also have a higher months of inventory, which is situation normal. Does that mean that the market is crashing? Absolutely not. We are absolutely just flying very level and flat as we have for the last 3 years. No different than the reporting that you've been getting. Feel free to go back to the channel. We go back to 2007-ish, and you'll see that everything is pretty consistent. And the message to market here is, look, we are getting to a more of a balanced market. Buyers have always been and will be, based on the information they have available, very, very spot on as to what is a good value and not. No different than it's always been, okay? They just get more information like this channel, which helps people look at it. Now, if we take a look at what's going on, and let's come back here. If we take a look at what's going on in the median sale price, there you go. Again, super flat. There's nothing, outwardly crazy. 2023, no different than we talked about just before showing the charts. That was a pullback. Why? Because people were going from the high fours, low five, boop, almost all the way up to 8%, 7.5%. People pulled way back, as you can see, but everything else, it's right in the middle. Situation normal. All right, let's move on. When we jump into, we talk about what's going on in the market. Mortgage apps pull back modestly. That's a no joke because interest rates went up. Upper right, it's red because rates actually popped up on Friday. And that is because we had some earnings reports that were very positive. So everybody, the bond market didn't favorably like it, but the stock market did. Builders break ground at the fastest pace in the last 2 years. We are seeing builders starting to be a little bit more aggressive out there. And then, of course, mortgage rates move back up with oil prices. That is 100% accurate. Now, what does that mean for mortgage rates on the bigger scale? You can see how it's been bobbling along. It went back down. It popped up briefly. But look, the highlighted section, we're still 0.37% less than where we were at this time last year. So our rates are still better now than where they were at this time last year, which is great, okay? So let's talk a little bit about what's coming on market here. Market time, we are 9 days on market. Whoop, let's go back one. Hang on a second, that was too fast. There we go. We are 9 days on market, longer than where we were at last year, but that is definitely better than the 25 days that we were earlier in the year, or 14 days. We've dropped that down to 9. Our activity has been getting better. List to sales price is still 1% off year to date, 2% for the up to the 6th of June. That will change, I am sure, as rates start to adjust. When we start taking a look at the actual 7-day average for what's coming on market, look at this. 1,440 homes came on market, 1,235 went off market. Other than Friday being the biggest list date of the week, everything that we've been seeing consistently has been one home coming on market, one home going off market. That has been straight across the board. We've seen a modest increase week over week with additional homes or homes staying on market longer. The however is we are still seeing sales. We're still seeing multiple offers for well-priced homes. So don't think it's not there. Don't think that our market is crashing and burning, because it is not. Now, does that mean that buyers still continue to be in a little bit more control? That answer is yes, absolutely. So for sellers out there, overpricing, 100%, the kiss of death. Make sure that you are pricing yourself conservatively. It is better to get more people looking at your home than to have crickets. Okay, I'm just saying. All right. Remember, there's no cost. There's no marketing here. Just do us a solid. Make sure that you share and like the video if you would. Let's take a look at our ongoing real-time numbers here. So year-to-date, sales are down 1.9%. As you can see, that's just a little over 1,000 homes. Actually, not even that. When we take a look at the pended, our pended are up 2.8%. Even the lower chart there, when you take a look at the month of May, we ended up really well, 9.9% more. I don't know why that keeps doing that. 9.9% more pended homes, even though the sold listings lagged a little bit, about 200 homes. The however is for the same month, we're up 10.7% on pended and 8.6% on sold. So we're still seeing, again, some very positive trends, and we've seen that all week. When we take a look at pricing has come down. And remember, pricing is one of those funny things that it goes up and down every single week. I'm not seeing anything crazy here. One week we'll be up 30,000, then we'll be down 22,000, then we'll be up 40,000. We might be down 4,000. It goes up and down all the time. It's just the average of what sold that week. So it's a very small picture. The one on the right says, hey, year over year, or year to date, I should say, look, we're $12,000 off. Okay, last couple of weeks ago, we were positive. So again, this goes up and down, and I'm not seeing anything that is alarming by any stretch. Are we seeing some softening in some pricing in many areas? Sure, we are. Meaning that we're not seeing, 4, 5, 6% appreciation. We're seeing 0.5%, 0.7%, but it's still flat-ish, maybe just, like a quarter degree, half a percent on the treadmill going up. Not much, but we're not going down, not like some of the other areas. Rural areas, those areas are dragging down the metrics. Why? Simple enough. They're more rural. People are seeing cost of funds, fuel, inflationary costs, which that means that they need to be closer in because, well, there's only so many dollars in the bucket, right? You can spend it on fuel or you can spend it on a house and be closer. That's trade-off. Anyway, moving on. If we come back here, we take a look at new construction. New construction, I've got a funny little chart. So they slipped a little bit. They've been doing super awesome the last 3 months. And, even for the month of June, look, they're up almost 21% as far as sales, for the same month year over year. We slipped a little bit on solds and whatnot. Pricing wise, again, they slipped this last little bit. Not sure why, because we are definitely seeing a lot more activity with these guys. Well, take a look at this. Remember when I said new construction is still a really great opportunity? They've seen a wee bit more volatility than normal, but we did dip down, as you can see on this chart on the right. We were a little bit lower than where we were at this time last year. Some of that, again, has to do with confidence. Some of it has to do with layoffs, confidence in the economy and whatnot, and people just saying, hey, let's put a pause to this. And so we're seeing some adjustment on pricing. Not uncommon, right? So, video will be attached down below. 5 questions to ask when getting quoted a mortgage loan. It's free. Watch it. You should only watch this, really, at the end of the day. Only watch this if you're interested in saving money. That's it. There's no cost. It's free. It gives you the 5 questions that you need to ask to make sure that you're getting what you think you're getting. You're not being pulled in by marketing. I'm just saying it's free, but only watch it if you want to save money. All right. I'll get off my soapbox again. All right. Here we go. So bank-owned homes, again, there's not a ton of them out there. Our numbers, look, they are just super low, all things considered. Off to the right there, you can see we've had 98 more homes this year than what we had last year. And again, that's a small number. That's 3/4 of Washington state. When we take a look at the center chart, you can see that, again, single-digit numbers. And when you double the single-digit number, it looks massive, and it's not, right? I mean, when we talk about solds are up, 133%, that's 4 homes, right? What is important is that notice the defaults have been increasing on second mortgages. That is one trend that we are seeing, which is a little bit of a concern. Divorce is still the #1 reason for mortgage defaults and whatnot. REO inventory increased by 98 homes year to date. That's, again, 3/4 of Washington state. Still have some really low numbers, nothing really earth-shattering there. I do want to give a shout out to credit unions. We just had our Northwest Credit Union Collectors Association meeting. It was fabulous seeing all of them. Here's the funny thing. If you're with the credit union and you're in trouble, the nice thing is they want to work with you. That is the difference between them and a big box bank. My hat goes off to them. That's why we love working with them. They are great people. We had a 3-day conference, and it was all about how they can work and help you. What alternatives can they help you with? That is super awesome. You couldn't ask for much more than that. Anyway, in the meantime, it's going to be kind of a crazy day out there. Have an absolutely fabulous Saturday. I'll see you on the next video. Don't forget to smash that subscribe button. Let's have a little bit of fun, and I'll see you on the next video. Take care.